Apple beat estimates with $111.18 billion in revenue and $2.01 in diluted EPS, but the stock barely moved because the quarter had one visible weak spot. iPhone revenue reached $56.99 billion, slightly below the $57.21 billion forecast. The result was strong enough to beat Wall Street, but not clean enough to spark a bigger reaction. The pressure comes from $111.18 billion and iPhone demand. One is the confirmed signal, the other is the first trigger that can show whether the opening event is becoming a larger operational, market, or user problem. The confirmed context is that services carried the cleanest momentum. Services revenue climbed to $30.98 billion from $26.65 billion a year earlier, while total product revenue reached $80.21 billion. Total net sales were up from $95.36 billion a year earlier. Apple's net income reached $29.58 billion, showing the company still produced significant profit growth. The baseline should be read through services segment and 30.98b. Those details narrow the story to what is established. So speculation does not carry the same weight as confirmed context. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Apple beat estimates because the mechanism was mix and margin, not just iPhone volume. Services tends to be a higher quality recurring revenue line than hardware replacement cycles. Product sales still matter, but the services segment gives Apple a steadier layer tied to its installed base. That is why a small iPhone miss can coexist with a broader earnings beat. The mechanism sits in revenue mix, with higher services showing the structural signal behind it. That explains how the event can change access, trust, liquidity, execution, or pricing behavior. The operational proof is hardware cycle. Without that proof, revenue mix remains a promising mechanism, but the stronger conclusion has to wait for evidence that the process works under pressure. The impact is split between investors watching growth quality and customers tied into Apple's ecosystem. Regional sales rose across every listed geography, including the Americas, Europe, Greater China, Japan, and the rest of Asia Pacific. Apple also approved a $100 billion buyback, which can support earnings per share by reducing share count over time. The affected side is global demand, and the active scale or condition is $100 billion buyback. That makes the consequence practical, because it identifies who needs to adapt and which signal could change their position. The open question is whether services growth can keep offsetting hardware softness. The iPhone line was the only major revenue category listed as missing analyst expectations, and it was the second iPhone miss in 3 quarters. A buyback can help per share math, but it does not replace the need for product demand to stay healthy. The unresolved item is iPhone line, and the current limitation is second miss. Keeping that gap visible prevents the story from drifting into certainty before next quarter supplies better evidence. The uncertainty should be measured against next quarter. If that signal appears, iPhone line becomes easier to judge. If it does not, the current limit around second miss remains. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Apple beat estimates, the next signal is whether the company can deliver another services record while getting iPhone revenue back above expectations. Watch services growth, regional demand, gross margin, buyback pace, and any guidance around new product cycles. The quarter proved Apple is profitable. The next test is whether growth looks broad enough. The next trigger is iPhone beat, not a vague promise of future movement. If that trigger arrives with record services, the story gains confirmation. If it fails to appear, the earlier pressure remains incomplete. The final readout is not complete without record services. That condition links the next trigger to measurable progress, which is the difference between a headline reaction and a confirmed development.